The markets open slightly higher ahead of Trump's Liberation Day tariffs that will be unveiled later tonight. Mid-caps relatively underperform.
Tata Consumer, that's the top Nifty gainer. It's rallied close to around 6% after Goldman Sachs upgrades the stock to buy with a target price of 1,200 rupees, expecting the company to return strong EPS growth. On the other hand, BofA Securities downgrades Nestle to underperform with a target price of 2,140. They've cut their earnings estimates by around 3 to around 5%, citing soft demand trends, among other factors. The stock slips close to 2%.
CSB Bank climbs more than 2% on the back of its Q4 FY25 business update that saw strong sequential growth, with deposits rising 10.34% sequentially.
Pari and Premier Energy slip after Bernstein initiates coverage on both the stocks with an underweight rating. The brokerage cites current market cycle, decline in return expectations, and rich valuations as the key triggers.
Bharat Electronics is under pressure on the back of its FY25 business update. While revenue growth surpassed guidance, order inflow missed the guidance of 25,000 crores. They had a brokerage note on this front as well.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me today is Vinny. Hey Vinny, looking quite good for the markets. The Nifty is up close to under 100 points. The Nifty Bank has bounced back. It's pulled back close to around half of yesterday's losses. And getting into Trump's tariff day, that's Liberation Day as he is terming it, it appears the bulls, they're taking some bullish bets. I think the question is, how bad can it get from here on? What more can he do? Or is the bad news in the price? Well, time will tell. For the time being, we had pulled back close to around 600 points from last week's highs.
Absolutely, and an interesting day coming in. Good morning to you as well, Nigel, firstly. But today what we're seeing is a bit of an underperformance that came in from the broader end of the market, right? So that is something to watch out for as well. And that advance decline ratio in the morning at one point of time was more in the favor of declines and advances. Now it's almost in the middle. We're seeing 1,000 stocks in advance, 1,000 stocks in declines as well on that front. So yes, we're seeing it nearing that advance decline ratio gap is surely coming down, coming off. What's doing well today is obviously we're seeing Nifty Realty that's managing to hold on to some bit of a gain and a very strong gain among the top sectoral gainers. So that is something that we should watch out for. But on that note, let's get started with the show. And welcome on board Chandan Taparia of Motilal Oswal Financial Services for technical check on the market. Chandan, good morning and thank you so much for joining in with us. Like Nigel was mentioning is there as well is that tomorrow is the D-Day. Liberation Day is what Trump is calling. Today, market surely have seen that recovery that has come in, or we're seeing it in the green. But as a level, what are we watching out for in terms for the Nifty as well as the Nifty Bank?
Good morning, Vinny and Nigel. Thanks for having me. So yes, I believe volatile cues could continue to be in the market. The good part is that index is holding well above its 50-day exponential moving average. But the concern is it failed to hold 23,400 zone and yesterday drifted lower to 23,150 marks. The good part is that selective stocks are doing well and Bank Nifty is finding some support. But the concern is that call writing is intact at higher levels. So I believe that buy on decline stance could continue with some volatile cues ahead of an important day. As of now, I believe that 23,000 could act as a major support for an upside move towards 23,550. So we have to play a broader range in between 23,000 to 23,550 marks. However, volatile swings could be there. So one can play with some option strategy or can play the range by going with the option spread or buying with at the money strikes. Looking at the Bank Nifty index, comparatively Bank Nifty is holding well. Just a couple of days back, it surpassed a key hurdle of 50,000 and after that, it headed to 52,000 marks. We have seen a consolidative move. On last trading session, it drifted below 51,000, but again, we are holding above the same. So I believe that 50,750 could act as a major support and Bank Nifty has potential to recover to us 51,500 led by recovery in SDFC Bank and ICICI Bank in heavyweight snake.
Okay, all right. Hi Chandan, good to see you in. Any individual stocks you'd like to give us? Individual stock ideas?
Yeah, Nigel, thanks. So I'll focus on Indian Hotel as a first preferred pick. I believe that consumption and vacation theme will continue to be in the market over the next couple of weeks, looking at the long extended weekends. So Indian Hotel is one name which recently taken support at 780 marks. That is exactly 50-day exponential moving average. If I look at the rollover data is indicating on the positive side with buildup of long positions. We have seen some put writing at lower strike, and this is one of the strongest counter with margin of safety. So one can buy with support of 808, and Indian Hotel can head towards 860 marks. Second trading idea, there is buy on Bharti Airtel. We have seen a strong momentum in the telecom counter in last 2-3 days, and Bharti is one of the counter which is heading to us or gearing up to us is new lifetime high. We have seen a long consolidation of last 8 months, and now a small follow-up above 760, 770 can open the upside of 5 to 8%. So in that scenario, one can buy Bharti Airtel with support of 1725 for an upside target to us 1820. Last but not least, there is buy on UPL. I believe selective chemical name could be in focus. UPL has seen a profit booking from 670 to 620, but yesterday is bottomed out with exact support of 50-day exponential moving average, and that is working well from last 55 trading session. If I look at the data setup, some short covering is clearly visible, and the counter is holding well. So expecting next leg of rally, one can buy with support of 632, and UPL can head towards 670 plus zone.
Sure. Chandan, just a quick word in terms of public sector banks. Anything on that front, PSUs that you're looking at? We're seeing a bit of a fall coming in here, but anything that you find interesting here?
So like if I look at the Nifty PSU bank index that has been consolidating in a range, the good part is that in the last month, we witnessed a decent recovery after the corrective move of last almost 9 to 10 months. In last 3 to 4 weeks, we witnessed some recovery, but now from last 5 to 6 days, it has been consolidating. PSU index has been finding hurdle at 6370, but at the same time, 6100 zone is providing a major support level. So some support-based buying and consolidative move could be there. And if I have to pick one name, then again, it will be State Bank of India, SBI. It has been consolidating in a range, but multiple supports are visible at 760 marks from last 5 to 6 days. So with a small support of 760, one can go long for an upside target to us 785 to 800 zone. Apart from State Bank of India, one can also look at the counter like non-FNO name like Union Bank or Indian banks. I think some support-based buying could be there. And I noticed that even after the market decline, most of these counter have not corrected, remain resilient, or either witness some accumulation at lower levels. So I think one can focus on selective PSU bank, including SBI as a top bet.
Right. Thank you so much, Chandan, for that. And thank you so much for joining in with us on the show as well. But now let's focus to our special segment where we will get you a few ideas of profit from Money Control Pro. Kanchi Shah of moneycontrol.com is joining in with us to talk to us about the stock that she has been tracking closely. Kanchi?
So the company that I've chosen for today is Bajaj Auto Limited, which is the largest three-wheeler manufacturer and second largest motorcycle manufacturer in India. Bajaj Auto has reported a 22% increase in export volume in Q3 FY25, which is reflecting a very strong presence in international market. Latin America emerges as the largest emerging market for motorcycles, nearly twice the size of Africa, presenting a very significant growth opportunities for the company. Also, the depreciation of the Indian rupee is expected to benefit Bajaj Auto's bottom line by enhancing the value of foreign currency earnings, which is derived from the exports. Bajaj Auto has made very significant strides in electric vehicle and CNG segment. EVs now contribute up to 22% to the domestic revenue. The Chetak EV scooter has experienced a very remarkable turnaround, achieving a 25.8% market share in March. Additionally, Bajaj market share in EV three-wheeler has also increased to 35% in Q3 FY25. The company also launched Bajaj Gogo, which is an electric three-wheeler, and plans to expand its EV portfolio further into the three-wheeler segment. With a very positive outlook for two-wheeler demand and strong recovery in rural sales, Bajaj Auto offers a very compelling investment opportunity. The stock is currently valued at 25.5 times FY26 projected earnings, thus presents a very solid growth potential for the investors.
Thank you so much for that, Kanchi. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Welcome back. I think we should pull those crisscross lines up for you yet again on the screen, and that's telling you the sentiment is tilting towards the positive side. Because when we started off trade, there were very few stocks that were on the advancing side that compared to the number of stocks declining. But take a look at that. They almost kissed each other at the start of the show. And now you have more number of stocks that are advancing than declining because a lot of those mid-cap names have recovered. That said, let's focus on the top winner and the top loser on the Nifty. BEL, that's the top loser following its release with regard to its business update for FY25. And it appears it's fallen a little bit short in comparison to what the street was expecting and in comparison to their guidance. Upasana joins us to break it down for us. Upasana.
Well, the defense major BEL continues to remain in focus this week also after the company reported its FY25 provisional numbers. Now, overall, if we see the revenue guidance of the company for FY25 was 15% and companies reported a revenue growth of 16%. So the company beats its revenue growth, but there's a miss in terms of the company's order inflow guidance of 25,000 crores. Now, if we look at the FY25 revenue, it stands at 23,000 crore with an uptick of 16% on a YoY basis, as mentioned earlier. And if we look at the Q4 revenue, it comes at 8,462 crore with just a single-digit growth of 3% on a YoY basis. Now, Q4 revenue is a miss according to Nuvama estimates, and it has reported a low single-digit number. As compared to the 9-month FY25, the growth was as high as 25%. Now, if we look at the FY25 export sales, they saw an uptick of 14% on a YoY basis and stood at $106 million. And FY25 order inflow stood at 18,720, which is just 75% of the overall full year order inflow guidance that the company has given. Order book, it stands at 71,650 crore with a degrowth of 6% on a YoY basis, and company's export order book has also seen a sharp degrowth of 12% on a YoY basis. Now, Nuvama says it prefers BEL over HAL, and it does not see any earnings guidance, any earning cuts, or downgrades on BEL on the back of this. Morgan Stanley has also given an overweight call on this and has given a target price of 364 per share. So all in all, that's the reason the stock remains in focus today. Let's see what happens ahead of this.
Absolutely, Upasana. We'll keep an eye out on this one. Second consecutive day of fall. This came in yesterday just before market close. And in that, yesterday and today's trading session, it's down 7%. But let's move on and talk about now the top Nifty gainer for today, and that is Tata Consumers. This is after Goldman Sachs has upgraded the stock. Nimesh is joining in with us to give us more details and what is standing out in the brokerage report. Good morning, Nimesh.
Hi, morning, Vinny. So, as you rightly pointed out, 7% higher, biggest F&O gainer today on the back of a big upgrade on Tata Consumer from Goldman Sachs. So they've upgraded the stock to buy from neutral and they've raised the target price to 1,200. Now, Tata Consumer for the last many quarters have been struggling with the earnings. That looks like it's changing according to the Goldman note. So Goldman believes that the company is poised for a very strong return of EPS growth over FY25, FY27, largely on back of few reasons. The first reason is recovery in the tea prices on the back of price hikes. So that's the first thing. Second, strong innovation and distribution expansion of the growth businesses. So that's going to be a big kicker for Tata Consumer going forward. And third, lower interest cost as the acquisition debt has been paid down by the company. So these are the three reasons why Goldman believes that the earnings are going to improve from here on. On back of this, Goldman has raised the earnings estimate, EPS estimates for FY26, FY27 by 3% and 7% respectively for Tata Consumer. And Goldman believes that within the FMCG basket, Tata Consumer, according to them, is going to report the strongest earnings going forward. So that's the reason why a big upgrade. And I guess because of the fact that the earnings are going to be so strong, we've seen a very sharp reaction in the stock price today.
All right, so that's the big one that's moving in today's trading session on the upside. But Nimesh, stay on. BofA, they have issued a couple of downgrades in the FMCG sector. Both HUL and Nestle under pressure because of that. Tell us more.
Correct. So I'll only focus on Nestle to start with. BofA issued a downgrade the stock to an underperform, and they've cut the target price to 2140. They've cut the earnings by 3 to 5%. Couple of reasons why they believe that earnings will be disappointing. One, a combination of soft demand trends, cost push and aggression from the competitors. That's going to impact the earnings going forward. Nestle has to do a very tight balance between growth and margins. And given that there is so intense competition, the margins are going to get impacted at least in the near term. And that's the other reason why they believe the earnings will be in pressure. And also the valuations. It's still rich in terms of context of the growth as well as margin. So On back of all this, a downgrade on Nestle to an underperform by BofA, and they've cut the target price now to 21.40 on Nestle.
Okay, Nimish, thank you so much for that. As of now, Nestle is down almost 2% in today's trading session. But as we slip into the break, here's a programming note for you all. The future belongs to Bharat, and the Rising Bharat Summit 2025 is where visionaries show us how to lead it. Get inspired by Arvind Srinivas, co-founder and CEO at Perplexity, the AI distributor, redefining how the world researches and searches for knowledge, gaining transformative insights from Vivek Wadhwa, CEO of Vinox Biosciences, as well as acclaimed academic entrepreneur and author, on how India can lead the next wave of breakthroughs in AI science and innovation. Join us at Bharat Mandapam, New Delhi on April 8th and 9th for a powerful exchange of ideas shaping the nation's next lead.
Welcome back. Well, the markets continue to hold with good gains. We're up 120 points or thereabouts, so we have cut close to around a third of the losses that we saw yesterday. In terms of stocks moving around from the broader markets, DB Realty comes on your radar. That stock has seen a sharp spike up in the last few minutes. I think let's get the intraday chart out there. Big uptick is what we're seeing. HFCL, that's another stock that's suddenly seen a good recovery from the low point of the day. So I think we should get that one out. And Tata Steel, that's moving higher because a couple of reports indicate that ArcelorMittal in Europe, they have gone ahead and they have hiked prices. So that's having a bit of a rub-off on Tata Steel, up close to around 1.5%. Let's focus on the energy stocks though. Waaree Energies as well as Prima Energy, both of them are under pressure because there's an underweight rating come about from a brokerage. Vivek joins us to tell us more. Well, Vivek, both the two stocks, they're down between 2 to around 3% because of this. Tell us more.
Absolutely right, Nigel. Very interesting report coming from Bernstein today. So they've written about the solar PV space and they've initiated coverage on both of these stocks. They have an underperform rating on both of them, or underweight rating. Waaree, they have a target price of 1,900 rupees a share. Premier Energy is close to 693 rupees a share. What is it that they're saying? Number one, they actually like the entire space. They also like the moves that the companies have made. So what do they like about the company? First, have a look at that first. They've made smart investments. They're both pioneers as far as India's solar PV space is concerned. Both of them potential, especially in the recent quarters or in the near term, is very, very promising. And along with that, what is it that they don't like? They also say that the supernormal profits or supernormal returns that the company have enjoyed in the recent past is something that may not continue for a longer period of time. Companies, though, are aware of this and they are diversifying into energy transition areas such as batteries. Now, however, why does Bernstein have an underperform rating? Number one, on the back of the fact that we are now in the late stage as far as the cycle positioning is concerned, expectations of deteriorating returns from this point on, high valuations, regulatory arbitrage business is how they look at this entire solar PV space, and they believe that this particular space cannot justify the kind of high valuations that the companies currently enjoy. Along with that, they say that the industry is now close to cyclical peak returns. This is on the back of the fact that retail prices are almost 2 to 3 times the global levels. There is low entry to barrier, big competitors on the horizon. Remember, whole host of large conglomerates have gone ahead and announced big plans to set up solar PV plants and module facilities. So what they're saying, it is right now too early to assign credible value to new ventures, especially with large conglomerates entering the space. On the back of that, they're quite cautious and they have an underweight rating on both of these stocks, on the back of which both the stocks are under pressure today.
Okay, Vivek, thank you so much for that. Now, let's move on to MCX. That's a stock that's in focus as well. And this is on the back of its Q4 business update that's come in. Mamakshi is here to tell us more details on this one. Good morning, Mamakshi.
Good morning, Vinny. Well, MCX is in focus on the back of its trading activity update. MCX transaction revenue stood at 289 crores for the fourth quarter. Now, compared to the previous quarter, this is a downtick of almost 4%. And it is also slightly lower as compared to Morgan Stanley estimates of 293 crores. ADTR, which is the average daily transaction revenue, stood at 3.9 crores for Q4 as compared to a Morgan Stanley estimates of 3.95 crores. So therefore, it's slightly coming in slightly lower as compared to the street's expectations.
Morgan Stanley has an underweight rating on MCX. They have a target price of 3,400, which is significantly below where the stock is currently trading at. But going forward, they're building in 4.02 crores of ADTR for FY26 and 4.19 crores for FY27. On the other hand, UBS has a buy call on MCX, although they've gone ahead and reduced the target price on this counter from 7,800 to 7,250. They say that the volume information that the exchange puts out has indicated a tad soft quarter, but however they're expecting the volumes to improve going forward. Overall, however, quarter 4 revenue in their opinion is expected to see a decline of nearly 5% quarter on quarter. So therefore, given the kind of trading activity that has panned out over the last quarter, MCX is in focus today.
Okay, all right. Thanks a lot for that, Vamakshi. Well, before we wind down, a few stocks in the broader market. Force Motors, that was a stock that was down close to around 1% at the start of the show. That's done a bit of a U-turn. Currently, the stock at the high point of the day. Well, on that note, though, we'll wrap up on this edition of Chartbusters. But as the global markets remain on the ahead of US President Trump's Liberation Day, tune into CNBC-TV18 tonight at 1:30 a.m. onwards to get the latest updates and analysis as Trump's tariffs come into effect.